Welcome back to another review. As always, I'm going to be posting these on Twitter too. And here we have is the 15-minute chart of NQ. And here, this is a constant encroachment of a 1 hour wick that we fully traded up to. And we liquidated buy side liquidity, and we had SMT above true day open. This shows us smart money is accumulating shorts above midnight opening with that SMT, and we have all this low resistance liquidity here. This news wick here is just manipulation. We left a low here. This is just manipulation. Although it might look like we had a significant run here, this was just a manipulation move, and then we take these highs. We immediately, look at the wick here. That is a true sweep of liquidity. We're respecting these highs very well so, and we want to close back within that range there. So then we're going to distribute to the next two candles. Then we come back up, we rebalance or we reprice to this inefficiency. We leave some of it open here. Then we come back lower. We take sell side once more within a 1 hour buy side imbalance. We then have a 15-minute change in state delivery. We come back lower, and then we reprice, take this high within that imbalance. So as we can see, smart money got active. They went short up here, and then they offset distribute below this low, once more below this low, and then they're out of their positions here. And now they're distributing their short positions to willing sellers at a lower price. They will then accumulate longs or get out of their positions below old lows, and then we distribute back up to this high right here. So since we know that we are likely in a consolidation profile, as I outlined yesterday and kind of what I've been saying within the live streams, we're probably just going to be range bound. So we're not going to do much trending movement. So therefore, a profile like this today made a lot of sense. We take buy side, sell side, close back within the range. Not doing too much movement, and therefore still staying within this higher time frame consolidation. So here we have is a 5-minute chart, and as we can see, power 3 coming into fruition. Here we have accumulation, manipulation, distribution, all around this 930 opening price. 930, we get a Judas swing higher. We come up to where do we reprice to? New day opening gap right here. Also, constant encroachment of that 1 hour wick, and then we form an SMT. We then have a 5-minute change in state delivery, 5-minute immediate rebalance. Then we end up redistributing within this breaker. And notice how we don't really offer much retracements. We come up to here, and then we just immediately distribute. So this was kind of a fast market maker sell model. We then end up taking minor sell side, that news low, and then the larger sell side liquidity pool, as well as coming down to that 1 hour imbalance. So we are taking sell side liquidity, and we're also rebalancing to an inefficiency. Then we come back up into here. This breakaway gap now becomes a good draw on liquidity. Also, this order block right here, we draw into that at a certain key point as in time, and I'll look at what time that was exactly. Then we get change state delivery, pull back to where, or retracement to where, order block right there, then distribute lower once more. And notice how we initially trade above this new week opening gap, but just to reprice here. Then once we traded below that, that's kind of a key. That's kind of the light bulb that we want to go ahead to sell side once more. And then we come up here, we reaccumulate within constant encroachment of this, just to buy side right there. So let's look at this in a little bit more detail. So as we can see, it's all pretty much the same thing. We have a fair value gap in, and then a fair value gap out. So now becomes a balanced price range. It could be an inversion right there. This is showing manipulation into a key PD array, then manipulation out. Now we have an immediate rebalance here, right at true day open. This immediate rebalance gets respected. We leave this as a breakaway gap. Smart money's accumulating shorts here. They're selling here. They're selling here. They're selling here. And now we have a 5-minute breaker. I didn't point that out, but it's in the previous chart. And then we have a breaker in line with the fair value gap, in line with the new day. This is a current new day opening gap. We don't respect it to the tick, but we just coming up to reprice this order block. Displacement lower. Breakaway gap. And notice here, from this high, from this dealing range high to this implied dealing range low, this is the exact 50% midpoint. At around 50%, we expect to see consolidation, retracement, or a stop hunt. Notice how we don't get any of those. We just immediately take sell side here, or this low right here, come right up to that 50% DRT level, and we just immediately reprice lower. So we're not really offering much here in terms of retracement. We're just showing straight speed to that draw on liquidity here. And notice what time is this happening? What other time would this likely manifest? 950 macro. Notice here, market structure shift. Forgot to pull that out. And then we have a reaccumulation area. And as you can see, look, negative 3.5. That is that low. I'm framing it from this body to this body right here. Boom. Perfect standard deviation. And notice how negative 3 pretty much is sell side liquidity there as well. Very nice 950 macro. Very nice 950 macro study. There's not really a whole lot in terms of retracement. You kind of have low risk entry, first stage, and then quick second stage to sell side. And then here we have is the kind of lunch leading into lunch here. So 1050 macro leading into 1150 macro leading into lunch. As you can see here, I don't know why I wrote that, but we have a trend line here, trend line phantom. We have low resistance liquidity. We make an initial low within that imbalance. We end up getting not really much here that I like. We have an imbalance or a block, fair value gap. Or it's not fair value gap, but a volume imbalance here. Notice how that holds. We come up to that breakaway. I don't really like this. I personally would not like this. This isn't something worth trading. Although I have seen instances like this, but this is just leading into the sell side of the curve here. So this is just going up to then go down. So here we come into that breakaway. We have what? Fair value gap in, fair value gap out, showing manipulation. We barely tap into that inversion right there. We barely tap into that. We then have this down close candle right here. Project that out. Notice how this is happening within a new week opening gap. Oh yeah, I was talking about this earlier. But we come above this. We reprice above this to the breakaway. And then now we have displaced through it. Price is traded through the new week opening gap. We come back up. Order block right here. Down close candle. This kind of is a very small volume or fair value gap. I don't know why I'm calling it volume imbalance. Fair value gap in line with that down close candle here. Low resistance liquidity. Submit to that draw on liquidity. And then we end up getting breakaway gap with speed as we're kind of just consolidating here. And then we break away with speed, offering little retracements. And then here we have this right here. Mitigation right there. And we reprice the sell side liquidity. Notice what we have here. This high to low. -4. Map that out. You pretty much get that, or you get that low. Just off by a tick there. And notice what times these are occurring. 1050 macro, we get a reversal just slightly outside of that. And 1150 macro, we start distributing. Notice how this is kind of just time distortion. This just leads us up into that 1150 macro. And then here are my last two charts. This is kind of the end of the day. You have your 150 macro, creating low resistance liquidity. We have constant encroachment of that 1 hour BISI. We have a tiny imbalance within here. We trade right to, form SMT, inversion right here, fair value gap in, fair value gap out. Just because of the balanced price range, we're not going to trade back within that. We come up, we use this as a breaker, last up close candle, right there, and then volume imbalance. Volume imbalance is like a glitch in the matrix. If we respect that volume imbalance, that's very telling that, hey, we might go towards whatever this is respecting. Notice how we respect it here. And now the draw on liquidity could now be this high with that breakaway gap that we still have left open. Here we have 1150 macro, 250 macro, not a whole lot going on. But notice how we're just kind of just marking time. We are just marking time here. And then we're reaccumulating within constant encroachment of this new week opening gap. Notice the bodies. The bodies do not close below constant encroachment. We're holding above constant encroachment of that new week opening gap. We then at a certain time, I don't know if you can see, but at 350 exactly, getting intense, not intense, but we get a relatively nice spooling higher to this high, and look at where we close. Equilibrium of that parent dealing range. So if you don't know what that is, I had it mapped out from yesterday. I'm not gonna pull. Actually, I am gonna pull it up here. It's just the dealing range from this high to low on the 1 hour chart, but using the bodies. Is exactly where we end up closing. Oh, and I don't know if I swear I had the daily profile in there too. Oh yeah, I do. Daily profile. We have a 930 reversal. Some key studies in there is a 950 macro. We end up getting that distribution. 1150 macro. Right here. end up having 1150 macro displacement, and then how we drew to that data low. And yeah, that kind of was the review today. Hopefully, you all have a good one, and I'll see you guys tomorrow.